Time to take a look at your money this morning on Good Morning Quad Cities. We start this morning with the weekly stock market recap. Overall, the markets are down slightly. The S&P 500 is down 0.3%. Same for the NASDAQ. The Dow Jones Industrial Average is down about 1%. Well, for most of the past year, Americans have been facing higher consumer prices. Things like food, clothing, household goods, and gas all cost a lot more than they did just a year ago. But on Wednesday, the Department of Labor reported inflation has now reached 7%, a 40-year high. Financial advisor Mark Grywacheski is joining us now live this morning with his thoughts on the latest inflation data. Mark, good morning.
Morning to you, Josh. Good to see you again. Well, remember that inflation is the year-over-year increase in prices on consumer goods and services. And to your point, on Wednesday, the latest consumer price index was released that showed inflation jumped from 6.8% up to 7%. The highest rate of inflation this country has seen since June of 1982, 40 years ago. And look, many of our viewers, Josh, weren't even born yet, but that's the type of inflation that this has become, a near generational type of inflation. You know, you talk to many people and they still remember that sky high inflation of the late 70s and early 1980s.
Well, Mark, one of the big questions that we're hearing being asked right now is if there's any way to somehow limit the impact of these rising prices. Your response?
Unfortunately, Josh, it's very, very difficult to do so. Look, if you dive into some of the metrics behind this inflation data, you just see how expansive this inflationary landscape is. Very, very few, if any, aspects of consumer inflation or of consumer spending have been shielded from these rising prices. And unfortunately, some of the biggest price increases we're seeing are in basic necessities. Over the past 12 months, prices on meat have increased almost 15%. Eggs are up over 11%. Fruit almost up 8%. Clothing up 5.8%. Look at gasoline there, Josh. A gallon of regular gas has increased over 50% over the last 12 months. Look at natural gas, up over 24%. And natural gas is used to heat about 50% of all U.S. households. And again, used cars and trucks over 37%. And Josh, these are hardly considered what you would call high-end luxury items. They're everyday basic necessities. And this surge in basic necessities, you know, does tend to hit low-income and middle-class Americans the hardest.
But as we look ahead now, what are your thoughts about inflation for the rest of this year, 2022?
We should start to see some type of gradual reduction in inflation over the course of this year. By how much, it's just, you know, way too early to tell. But even if inflation does drop, Josh, to say 5% by the end of 2022, that's still well above that 2% ideal rate of inflation we'd like to see.
So if inflation starts to decline later this year, does that mean that those prices will also start to go back down?
Wishful thinking, I wish it worked that way. But remember that what is the definition of inflation? Inflation is defined as the annual increase in consumer prices. So if inflation does fall from 7% down to 5%, it means that instead of prices rising 7% higher, they'll have risen by just 5%. But that's still 5% higher from today's already sky-high prices.
All right, a lot of good information. Thank you, Mark, and we will see you next week on Monday.
Enjoy the rest of your week, Josh.